Good morning, welcome to the AUD Securities Markets Update. As we noted in our previous report yesterday, the US dollar traded within a choppy range on mixed economic releases from Europe and the US, but the biggest impact came in from the US figures. First of all, the core PCE price index eased back toward 1.2%, which is the lowest level since February of last year, while it had been anticipated to remain unchanged at 1.3%. The personal spending also showed no growth in April, despite the fact that the estimates pointed to a rise by 0.2%. The good news came in also from the personal spending, the personal income, the ISM manufacturing PMI, and the construction spending, which increased by 2.2%. These figures kept the market uncertain about the US economy again, especially after the recent economic releases, which came in with further disappointments. Therefore, the choppy range is likely to continue ahead of the US jobs report on Friday, in addition to the Federal Reserve decision later this month. As for the Asian session today, also there were few economic releases from New Zealand, Japan, and Australia, which had a notable impact on the market. Beginning with in New Zealand, the overseas trade index increased by the most since Q1 of last year, rising by 1.5% in Q1 of this year after declining for 2 consecutive quarters in 2014. However, this is less than the market estimates, which basically pointed to a rise of 1.6%. In Japan, the average cash earnings index also showed a positive surprise today, rising by 0.9% in April compared to no change in March, while it had been anticipated again to rise by only 0.3%, and this is the biggest monthly increase since December of last year. In Australia, the Reserve Bank of Australia left the cash rate unchanged as widely expected. However, the bank left the door open for further measures in the coming meeting, saying that the policy needs to be accommodative. Moreover, the bank also noted that further declines in the Aussie is also likely and necessary, and the Aussie spiked to as high as 76.60s following the decision, as the bank did not add any dovish tone to this statement. As for the European session ahead, there are also many economic figures will be released during the day, which is likely to have a notable impact on the market. In Europe, we will be waiting for, or we will be focusing on the Spanish and the German jobs report. But beginning in Spain, the unemployment change is expected to decline by 115,000 in May, compared to another decline of almost 150,000, which would be also the fourth monthly decline in a row. In Germany, the unemployment change also is expected to decline by another 10,000 in May, after declining by 8,000 in April, which would be the 8th monthly decline in a row and the longest declining state since 2011. In the Eurozone, we'll be watching also the inflation estimates today. The year-over-year CPI is expected to post its first increase by 0.2% in May, compared to no change in April, which would be also the first monthly increase after 4 months of consecutive declines. The core CPI, or the year-over-year core CPI, may also rise by 0.7 or towards 0.7, up from 0.6 during the same period, which would be the highest reading in almost 2 months. Finally, in the UK, all eyes will be on the construction PMI again today, after the disappointment yesterday from the manufacturing PMI, which missed the market estimates. However, today's construction PMI may rise toward 55.1 in May, up from 54.2, which would be also the first monthly increase after 2 months of consecutive declines. And moreover, we'll be watching the mortgages approvals in addition to the net lending to individuals, which is set to show some improvement. Going forward to the US session today, there is only one economic release across the session, which may have also a notable impact on the market, especially if it shows some surprises, and the estimates for the factory orders is expected to decline by 0.1% in April, after rising by 2.1% in March. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching.